This is Investor Perspectives. I'm the host of Investor Connect, Paul T. Martin, where we connect startups and investors for funding. In our new Investor Perspectives series entitled How to Solve the Fintech Problem, you'll hear about changes expected in the coming 12 months and our guests' final thoughts. As the COVID pandemic passes, we emerge into a new world. The fintech space is now undergoing tremendous change across the U.S. Every business is now a fintech business. We have investors and startup founders describe the shift from a centralized to a decentralized fintech market. I hope you enjoy this episode. Our first guest is Mark Michel, partner and founder at Runway Venture Partners. Runway Venture Partners is a New York City-based early-stage venture capital firm focused on investing in post-product market fit SaaS and software-enabled businesses. Runway invests in companies that put seed capital to good use and demonstrate visionary and entrepreneurial leadership, clear product market fit, and strong growth rates. Mark, thank you for joining us. So what else should we know about this segment besides the regulatory and the growth rates that are going on here? It looks like a great opportunity.
What else should you know? Look, there will be, I guess one thing I think is there will be lots of winners in this. This is a giant, industry, and it spans lots of different segments when you say, fintech. So we're talking about insurance tech, we're talking about payment tech, we're talking about banking tech, we're talking about lending tech, we're talking about data plays within the fintech area like a Plaid. We're talking about crypto companies like Coinbase and Circle, payments companies like Stripe and Braintree and Adyen. Payoneer just announced that they were going to come public through a SPAC today. So this is a very large industry with lots of different players and lots of different ways to win. It will not be, like some of the social media companies where it's winner take all.
Great. And so what changes do you expect to see in the coming 12 months? What's coming up next?
I have sort of two thoughts there. One is not so radical. I think a lot of people have been following the developments of AI, and I think more and more of these products are going to start to incorporate more and more AI and machine learning and take advantage of the data exhaust that comes from using these products and make them more personalized, more relevant to each particular customer, learn how the customer uses financial services, and develop products that are more and more suited to that person. One of the trends we've seen is sort of what I call micro insurance, where you see insurance companies literally insuring just an event. So I'm going to use a Lime scooter. I'm going to insure that trip. I'm just making up an example. Sure. That kind of thing. The other thing I think you're going to see, especially as we come out of COVID, is I think you're going to see banks start to close branches very, very rapidly. COVID has taught all of us how to bank online. I literally haven't stepped foot in a bank to deposit, a check in months. I do it all, digitally at this point. And, bank branches are very expensive. It's one of the competitive disadvantages they have against the new direct-to-consumer companies that don't have the cost burden of branches. So I think you're going to see banks start to really close rapidly a lot of those branches and try to get more and more of their customers just banking digitally through their platforms.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
I don't know, Holland. I'm all yours.
So my question is always about crypto. It's been coming for a while, and it seems like it's coming faster now. It always seemed to be a little bit challenged in the fintech space because of the regulatory, as you mentioned, and seems to be doing well in things like supply chain logistics because there's no regulatory, and it is a good fit technology-wise. What's your take on crypto?
I'm no crypto expert, so I'll start with that caveat. But, I do see that Bitcoin, I think, is starting to become a legitimate store of value, even for institutional investors. And to the degree that people are worried about large government deficits potentially having the impact of depreciating the value of the dollar, I think you're seeing more and more institutional investors use Bitcoin in particular as a store of value and a hedge against inflation. The other big use case for crypto, and I'm separating crypto from blockchain for a moment, right, but cryptocurrencies is using it as an actual currency. It's been difficult to do because of the volatility in the value of the currencies. And so there's a whole range of, what are called stable coins that have been created that are tied to the dollar. That are intended to be used as actual transactional, currencies. I haven't used one yet personally to transact, but I do suspect that, a day will come when that happens, if there's real value to using those currencies, especially in cross-border transactions where there are frictions between changing currencies. I can see it, first happening there before, using the, internal to a country. But as I said, I'm not a crypto expert. Those are just my sort of amateur observations of the space.
Great. Well, appreciate that. Appreciate you sharing this information today. How best for listeners to get back in touch with you?
I can be reached at runwayvp.com or through my LinkedIn account, which also has the same email address.
Great. Well, appreciate you sharing this today and hope to have you back for a follow-up soon.
My pleasure, Paul. Thanks for having me.
Our next guest is Matt Oguz, Chief Investment Officer at Iris Family Office and founding partner at Venture Science. Venture Science is a growth stage investment firm located in San Francisco. The firm is best known for its use of quantitative decision principles such as stochastic finance, multi-factor analysis, and venture capital. Matt, thank you for joining us again. So you mentioned the renewal in the space and the high growth. What else should we know about this segment? What else is going on?
In which space?
InsurTech and FinTech in general.
So, InsurTech, I think what we're going to see is newer players come into the market. I would expect some consolidation. Some of the older players, I'm sure they're out there looking for newer players to acquire. I think this is a good time to be a young company in that space, innovate certain things with, the dynamic elements of everything that being a young company brings, maybe including machine learning, artificial intelligence, more calculations, things that the age-old companies, weren't really able to execute because, most of the older companies are really after catering to the needs of if they're publicly traded, which most of them are, to maybe short-term requests, short-term pressures of quarterly earnings and things like that. So, when they're busy, chasing quarterly earnings and stuff, they're really not going to be able to put a lot of emphasis in terms of innovating or making a massive internal bet in a certain element of their core business that's been around for 40, 50, maybe 100 years. But the newer companies aren't under that pressure, so they can innovate however way they want. So whether it's InsurTech, FinTech, we see new banks emerge. We see new, you look at the stack of money, whether it's receivables or invoicing or HR or any element of a company, there's always room for something that's brand new. And something that's brand new only comes from startups. And as it should, because that's kind of how the machine of the economy here in America works, and hopefully around the world in other countries too. So, without naming exactly what subvertical, what particular area is attracting a lot of interest now, I would say it's across the board. But one thing that I would pinpoint, somebody asked me a while back, they said, would you ever invest in a company if they had no element of artificial intelligence or computation? And I thought about it, and I realized that the answer is no. I would absolutely not invest in a company if they have no AI in place trying to solve some complex equation or a calculation. Of course not. So I would always look for companies that truly implemented or are working on implementing, concepts of AI and machine learning in the things that they do, even though they could be going after an age-old industry like insurance.
Great. Do you think we'll see blockchain applications coming out in the InsurTech, FinTech space in the next 12, 24 months?
Yeah, I don't know about next 12, 24 months, but, the blockchain technology certainly has proven merits. And no one refutes that. Now obviously there's a lot of regulatory conversations and discussions around tokenization of some of those companies or their products and so forth that's out there. And I think that's very interesting to watch. And so we will see. I mean, as you know, there's quite a bit of discussion and debate going on out there right now, particularly in terms of the regulatory environment that these companies are facing. But I think if the regulators and the entrepreneurs are on the same page and everybody recognizes and agrees that a new product which incorporates cryptography, blockchain, and by the way, concepts like cryptography or blockchain are not so new. I mean, cryptography is actually one of the easier classes in computer science, and I encourage everyone to maybe watch a few classes online. I mean, it's very interesting and not that hard to really understand how hashing works and how cryptography is already part of our everyday lives. And so on that regard, I think the companies, without getting too exotic about what it is that they're wanting to do, if they're on the same page as regulators, of course, again, the end goal being providing the end user a more efficient, faster, and cost-effective way of anything. And for those companies who take that route, I think they will succeed. And for the others, they might end up fighting an uphill battle, and we'll see how things shape up for all the players in that space.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Well, I mean, all eyes are on, I guess, the progression of COVID around the world, and I think that's important. But one thing during the time of COVID that emerges is obviously life sciences, and so it's a space that we have some exposure to. But I'm very passionate about life sciences in general, and I think in the world, let me just take a few minutes to really say that, in this world, diseases like heart disease, cancer, diabetes, we really need to go after them much, much harder than maybe we had in the past. I mean, no discredit to the millions of scientists already working on those fronts, but we, as mankind, we have to do a better job in tackling those problems now that we've fought so hard to try to overcome the novel coronavirus. We should apply the same veracity, the same aggressive approach to all the other nuisance, I call them nuisance diseases because it could hit anyone, anytime, and it does, and it did. Go after that. So over the next 10 years, Hall, putting fintech, insurtech, all those things aside, I really hope that we overcome, these diseases that are hurting everyone with newer diagnostic tools, newer medicine, hopefully faster approval paths, newer technologies. The RNA technology is a new technology that's been approved for the vaccine. One wonders what else is out there that we can use. And if there's things out there, why are we not using them yet? So I think that's what I would like to kind of wrap it up with, kind of bring it back home to everyone's kind of state of concern and which is health. And I think, as we have fun, I guess, with the stock markets and, the Reddits and so forth, let us not forget that health comes first and foremost. So with that, just want to say thank you again for having me on your program. And I wish everybody a happy and healthy rest of the year. And looking forward to getting back with you soon.
Great. Well, thanks for joining us and hope to have you back for a follow-up soon.
Thank you, Hall. It's been a pleasure.
Our next guest is Joshua Siegel, general partner at Acronym Venture Capital. Acronym Venture Capital invests in unconventional funding rounds in New York City and rising markets with a preference for first-time and diverse founders. They are an opportunistic fund investing into late seed and Series A rounds of enterprise SaaS and omni-channel consumer brands that have achieved at least $1 million in ARR. Joshua, thank you for joining us again. So what else should we know about this segment?
The segment is very active. There's a lot of money in the segment. There's a lot of dry powder. There's a lot of money in the segment. People are taking a lot of investment. People are writing big checks. There are going to be a lot of people out there that are going to attack this space. I would say for any startup that's looking to attack, make sure you're well funded. You're going to have a lot of competition in the space.
And so what changes do you see coming up in the next 12 months?
I would say that you're going to see companies going public that otherwise would have taken longer to go public. So there will be companies going out at SPACs. There will be companies that are going to do a traditional IPO. There will be companies doing a direct listing, and that's going to happen. That is going to create a situation where any of these companies that now have a public currency, they're going to buy other companies. So there will be a lot of M&A activity as well, which we're very excited for. And I think with that liquidity, you're going to have employees, at a lot of these other insurtech companies go out and start even more companies. So there's going to be a lot of activity in the space, new companies starting up, and certainly exits.
Well, in the last few minutes that we have here, what else should we cover that we haven't?
I think the big thing to cover is really the migration of talent. InsurTech has traditionally been a very San Francisco and New York area. There's been some stuff out of Chicago as well. But now with people moving all over the place, you're going to have InsurTech companies, FinTech companies popping up all over the place. The good news about that, and the interesting thing that people haven't really talked about yet, is a lot of the insurance space has been dominated by the laws of New York. That's sort of just been what has been really happening because the Department of Finance in New York regulates a lot of financial services activity in the United States. That is going to change as people leave New York and come to states like Texas and Florida, where the laws are really kind of up in the air. And the regulators that are in those states want to attract talent, they want to challenge the status quo, and they want to do different things. So I think you're going to find as we go on, a lot of rules are going to be rewritten in states that before didn't have much say in the matter, and now will have a lot of say in the matter.
Well, I want to thank you for taking time to join us today and hope to have you back for a follow-up soon. Our next guest is Victor Orlovsky, General Partner at Fort Ross Ventures. Fort Ross Ventures brings together Silicon Valley venture expertise with an extensive network of relationships in the U.S., Israel, and Eastern Europe. Along with their LPs and strategic partners, they actively help accelerate success for their portfolio companies. Fort Ross's two funds combined have a total of $345 million of assets under management. Victor, thank you for joining us again. And so what else should we know about the fintech segment that we haven't covered so far?
Well, I think that fintech segment is huge. Right? It's like trillions of dollars, right? And margins are high. So huge markets and large margins make it very attractive for startups to play in this area, right? So and we see that even big players like Google were not successful, for example, launching the Google wallet, right? This was a big effort by Google and they didn't succeed. Why they didn't succeed? Because they don't know exactly the secrets which fintech operates with, right? So you just need to crack those secrets. And even Google couldn't do it sometimes. So it's really hard to crack those secrets. So I think that what you should know on a way to fintech, that there are hell a lot of different obstacles and secrets on this like way of startup to get through, from like being a small one to being a giant one. So Chime is a good example. Chime founders were not successfully raising their first rounds of investments, right? They went to all big firms, all very profound fintech firms. I don't want to name them, but I think that all know them. And none of them have put money into Chime, right? None of them. So Chime is a great success, but investors who invested early enough in this company were not regular fintech investors, because regular fintech investors decided not to invest, though the team was great. Why? Because nobody could thought of their very simple business model. What they do is debit card and overdraft to work at scale, right? And they have proven that this very simple business model, debit cards and overdraft, could be scaled out to those numbers we see now, right? Hundreds of $millions in revenue, and what's that, like $20+ billion in market capitalization.
Great. And so what changes do you expect to see in the coming 12 months in the fintech segment? What's coming up next?
Well, I think that 12 months is too little to really see any changes. I think that Chime and Marqeta will probably go public in the near future, maybe not like in the next 12 months, but in next 18 months or so. So we see that Affirm went public. I think that Klarna will go public at some point in time. This buy now, pay later project out of Europe. So I think that this will just be rather successful IPOs. So I think that long term we will see a lot of failures in UK fintech market. Companies like Revolut, Monzo, Moniz, many others, they are really great companies, but there are too many of them now, and competition is high. So I think that there will be very few companies out of UK, these neobanks, that will succeed to scale out and sustain their businesses, but many fintech companies, especially in UK, will probably soft land in some way, right? So what we don't see also on the market is that large players in like incumbent players and legacy players, largest banks in Europe or largest banks in US, they are not buying fintech companies, right? So what we see, Visa and MasterCard are aggressively buying. Payment companies like PayPal and others are aggressively buying, right? Startups. We don't see legacy banks buying startups. So we don't see this, this kind of activities on the market at scale, at least. So there are two ways, right? I mean, either like legacy banks are gonna start buying more aggressively, or legacy banks will try to catch up on innovation without buying this new players. So I don't know which way they will follow, right? But I hope for venture investors, it would be a good exit, right? A good outcome if this legacy banks will start buying finally, right? Will be more aggressive, because this will allow more straightforward exits through M&As, right? But I think that there are many reasons why banks could not buy startups. First is regulatory reasons. So banks are heavily regulated entities, and it's not easy for them to buy startups, right? Because they have to get an approval from a regulator. They see what's happening. For example, Visa hasn't gotten approval to buy Plaid, right? And this deal was revoked. So I think that banks are so heavily regulated entities that they will think twice before buying something. So moreover, I don't think that Wall Street is going to appreciate them buying startups, right? So PayPal may just buy a startup, or Amazon may buy a startup and add value. So if you just are at $200 billion market cap and you buy $1 billion company and you start with $240 billion, right? I mean, next day, trading next day, you added a lot of value, right? Because you only spent $1 billion and then whatever, you added 10. So I don't think that banks think that way, right? They don't think that their market cap will become stronger if they buy another startup, right? So and all these obstacles would prevent them from buying aggressively. So I think that we will not see a lot of banks, especially US banks and European banks, start buying startups from the market, fintech startups from the market. So I think that they will try to catch up and innovate from inside.
Well, in the last few minutes that we have here, what else should we cover that we haven't?
Well, I think that every company in almost every space tries to become a fintech company. Technology companies try to become fintech companies. Transport companies try to become fintech companies. Logistics companies try to become fintech companies, because fintech is infrastructure, right? And everybody's paying out some fees, right? We see now Walmart is trying to become a payment tech, a fintech company, right? They just founded a JV with Ribbit Capital, right? Ribbit Capital, our friends and partners, one of the most renowned fintech funds, venture funds on the planet. So they started a company, right, in fintech space. So everybody wants to get into this fintech space, not only startups. So I think that that's a trend, a global trend. So fintech will just be disintegrated from that perspective. So it will just be much less visible, much more diversified and disintegrated infrastructure than any other infrastructure on the planet, because every company will just become a fintech company in some way. And banks will probably keep going with credits, keep going with lending and risk management, right? But the rest will slowly but steadily go away from banking hands. So I think that's an important trend to follow.
I want to thank you for taking time to join us today and hope to have you back for a follow-up soon.
Thank you, Hall. It was really great to speak with you.
Our final guest is Matt Murphy, general partner at Montage Ventures. Montage Ventures is a venture capital firm actively investing in financial services, e-commerce, marketplaces, and healthcare startups. Matt, thank you for joining us again. So what else should we know about this segment?
So, I'd say, this is really a transformational time in fintech. And, what's interesting is I talk to my investors, which are limited partners, whether it's family offices or fund of funds or endowments or pension funds, looking into the space, it feels like fintech has already had, a lion's share of innovation. And it's an obvious question to ask. Where else is there innovation, right? And I'd say globally, there's plenty of room, right? We're very interested in LATAM and Brazil, specifically in Mexico, where, I'd argue that the financial innovation is in the early days, right? It's really in kind of the phase one that I outlined before, where it's, solving kind of, liquidity gaps. And then from there, we'll see phase two roll out of core product innovation. And I think Brazil and Mexico and LATAM are actually going to speed up the innovation cycle because the core fundamental platform, companies like Plaid, right, that enabled you to access an account or even, make real-time transfers, or TransferWise is another one. That core fundamental platform is established, right? So building a fintech company now has gotten, I don't want to say easy, but dramatically easier than what it once was back in, the late 90s when we were building E-Trade. You can set up a website instantly leveraging AWS and start to tap into these infrastructure layer plays and really launch a fintech company in, at least half the time, if not a third of the time of what it once was. And so all of that innovation is very exciting. But honestly, this next phase that we talked about earlier, this embedded finance phase, where fintech is expanding outside of a business model into really a transformative feature set that any company can integrate into their customer experience is really a fundamental movement forward that we're incredibly excited about and are always looking to meet smart entrepreneurs that share that excitement and want to bring innovation into this new space.
What changes do you expect to see in the coming 12 months?
So, like I mentioned before, a lot of strategics, large insurers, large banks are investing into the fintech space. We see that as really a fundamental, step of progression in here because with those checks, also come pilot programs, right? Either rolling the fintech products into the experience of the large institutions or launching brand new product sets in a partnership between the institution and the fintech. So I see that as a very exciting movement forward. I'd say other areas, obviously SPACs are quite fascinating right now, and providing a new form of I don't want to say liquidity. I'd say it's almost additional financing for a lot of these companies, right? That is, maybe less dilutive than what we're seeing in the private markets. And a lot of the companies in our portfolio that are exploring SPACs are really almost skipping a round of financing, right? So instead of going to the private market and raising their Series E or F, they're jumping into the SPAC market and doing a reverse merger to become a public entity and bypassing one of those rounds, those private rounds altogether. Now, it's important to become a public entity that you are ready to become a public entity, right? And so audited financials, of course, are critical. Obviously, accurately predicting your future revenue streams to a science is important. But really, is the company big enough to play in the public markets and get retail and institutional investors excited about business? So I'd say fintech is an area that is primed for a lot of SPAC mergers to occur. And I think we're just starting to see it scratch the surface. SoFi went out with a SPAC, IPOE, with Chamath and Adam Bain. That's a large one. Obviously, Hippo, is going out with RTP that we've seen. Moneyline, one of our portfolio companies, is in conversations publicly with Fuse, which is another SPAC, and we're just scratching the surface here.
Well, in the last few minutes that we have here, what else should we cover that we haven't?
Crypto is another fascinating space that's getting a lot of attention these days from large institutions, from startups. I think Jack Dorsey at Square just bought another 170 million, I think, of crypto. Elon Musk bought $1.5 billion via Tesla on crypto. But you're seeing a lot of the large banks also jump into crypto and add that as a core component in their financial portfolio. It's interesting. Crypto, I've had exposure in since probably 2011, when I was working closely with a gentleman by the name of Wences Casares and Myra Malka, who were very, very early in the crypto, I'll call it experiment at that point in time, and became just avid champions of cryptocurrency and blockchain as a core fundamental innovation in the financial technology space, but also the broader landscape when it comes to blockchain. And so I was able to get, really just an early appreciation and understanding of crypto back in 2011. It's obviously taking time. I think, in the last 6 months alone, we've seen a massive appreciation and adoption of Bitcoin as a core currency, but there's other interesting cryptocurrencies, Ethereum or Litecoin or Dogecoin or, what have you. We've seen a lot of interesting stuff, but, I do fundamentally believe that blockchain is a core fundamental innovation, especially at the database layer for movement of data. Not just financial currency, but data for a company. Ethereum's a fundamental innovation on contracts as well, digital contracts, transferring of those, storing of those, logging of those, and you can start to see as you let your mind run how those core innovations can completely innovate existing sectors that may not have had much innovation, right? Like look in the real estate area where title insurance policies and escrow and deeds could all be stored and generated on the blockchain, which would remove paper filing systems that are archaic and should be archaic, as is the fax machine. And we've since transformed from there. So I think we're just in the early days. But one of the core things that has been fundamental in the space is really getting a certain level of stability in the cryptocurrency space. It was hard for me to say the word stability when the currency's fallen like 15%, just literally in the last few days. But the fact that Bitcoin is holding at $49,000 to $50,000 a coin, where when I was introduced to it, it was around like 37, I think, or 60 a coin. And that wasn't that long ago, right? It was just a decade. And crypto has really held steady purely based on, limited supply, more use cases, more adoption coming in from large players that are investing, billions of dollars into the currency. I mean, Bitcoin is worth over $1 trillion these days, right? I mean, that's a massive, massive, core asset, right? From an asset class perspective. So, I'm very excited about it. At Montage, we've made a couple bets in blockchain and cryptocurrency. We're not actively deploying large amounts of capital there, but we are looking for smart entrepreneurs, that are rethinking the areas that we invest in, leveraging that asset class. So it is fascinating to me.
So what's the best way for listeners to get back in touch with you?
They can DM me on Twitter, MJM Report, or they can send me an email, mmurphy@montageventures.com. Always happy to hear from passionate entrepreneurs. One of the things we love best are outsiders to the industry, but insiders to the problem, where they've actually experienced the pain point firsthand, which is driving their passion for innovation and the journey. Right? Being an entrepreneur is not an easy journey. It's probably one of the most lonely, time-consuming, emotional journeys that you can ever go on as a founder, speaking from experience. But it's also one of the most rewarding, right? When you sell your first, service or product to a customer, and you start to scale it, and you build a team that are passionate about what you set out to achieve. So it's an incredibly exciting time to be an entrepreneur. And, we love to meet with those passionate folks and see if we're the right folks to help them out.
I want to thank you for joining us today and hope to have you back for a follow-up soon.
That'd be great. I appreciate it.
Thank you for joining us today. As always, be sure to leave a review, subscribe to this podcast, and share it with others. Let's go start up something today. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.